Hey guys, Forex Capital here. Let's take a look and see what KSM is doing today. So this was one of the requests in the comments below. So let's just check it out. Now this is also a very new coin. I'm not too much of a fan of very new coins because you never know, and I definitely like liquidity. But sometimes it's a little bit good to take a little bit of a risk, and then you get rewarded pretty well. So looking at the daily chart as always, let's just kind of draw some fibs from here. Let's see. It looks like they're not lining up as well as they should, so let's just remove this fibs and let's just draw some extension. So when you draw extension, you go from the low to high and then the pullback. So we're gonna go from here right about here and then the pullback right there. So these extensions, they line up pretty well. So let's just take a look and see. So we don't even have a 200-day moving average on this just yet. I don't see it nowhere. So we only have a 20-day moving average. So let's just work with what we got. Let's see. So we had this pullback right here, guys. Will be your line in the sand, the 23% retracement fib. If we break below $6.80, then we're pretty sure, very confident, because then you got we're gonna be below the 20-day moving average, so we're gonna go all the way down to about $5. So right about here or so. So about $5 if we break below the 23% retracement. As long as we're above this, this is still bullish. I wouldn't do too much right now because until we break above the 38% retracement, so that's $7.87. And I would like to see a break and then a pullback. Oh, by the way, guys, if you guys like the video, hit that subscribe button. Don't forget to pulverize that like button, because that's the only way we're going to reach out to 7 billion people and we're going to teach them how to trade crypto. Remember, we're a community here. We're here to help each other out, and we're here so we stop depending on the crooks, the bankers. I don't like those guys. I used to be one, by the way, so they're still crooks. That being said, if you guys get anything useful out of this video, send one friend to the channel. That way they can learn how to make money like you're making money and I'm making money. So that being said, I wouldn't do too much at this particular moment because I want to see a break of 38% retracement. If you have a break and then a pullback and then yes, the one thing that it somewhat concerns me is, are we going to break above the 61% retracement or not? Now that all depends if Ethereum continues to outperform Bitcoin. That's the #1 video. If you guys are trading any alts, you guys should always be watching that, because that pair has made me a lot of money, because and then it's somewhat of a derivative, so I know of what pretty much is going, not completely, but you get an idea of what's going to happen, and it's usually pretty good. So we just have to wait and see. I mean, if you manage to get long at the 23% retracement, then great. At $6.80, then great. If we do see a pullback, then I would probably, if I'm watching this very closely, depending on the entry point, I would probably put a little, just to get my feet wet, position at the 23% retracement, stop loss right below, and then see how it turns out. That way, the risk to reward will definitely check out, because your risk will be right below the 23% retracement, and then your reward easily is $9 to 60 cents. And if we pierce through this and hold above the 61% retracement, and then we're talking, because then this is going to start rallying even further higher. Your next stop will be $10, almost $11. So that's just something to keep in mind. And also, guys, we're trying to narrow down how often we're going to post this video, so just leave down on the comments below how often you guys want to see them. In our private chat, we're posting new setups every day, and you get access to myself all day. So here, we're just kind of trying to narrow that down. If you guys like the video, hit that subscribe button. Don't forget to pulverize that like button. Thanks again, guys.